Hello, my name is Kayla Weaver, and I'm a CPA at Arndt & Company CPAs. In this video, I'll be going over the basics of how to create a journal entry in QuickBooks Online. So here I have a sample QuickBooks Online company pulled up, and this is where we're going to be learning how to do a journal entry. So let's go over why we might need a journal entry. Usually, you'll be able to get most of your business data from the bank feeds. So we've got our checking account, our savings account, and our credit card account set up, our business accounts here. But let's say you accidentally pay for a business item through your personal bank account, or maybe you did it on purpose, you just weren't able to use one of these methods. Then how do you pick up that transaction? Because you still want to show it. Let's say you spent $1,000, you still want to show that $1,000 expense if it was for your business, but you're not going to be able to accomplish that by the bank feeds because it wasn't put on one of these three accounts. So in that case, we usually will use the journal entry feature. One of the other main uses of the journal entry feature is to make tax adjustment items. So like depreciation expense for each year, you'll usually get that whenever you're getting your tax return prepared. They'll calculate that. But that's not actually a cash item. That's not something you would see hitting an account. It's just a tax item. So you can make that adjustment by doing a journal entry. So let's go ahead and look at how to do a journal entry. So we're going to go up to New, and then over here under Other, you can see Journal Entry. We're going to select that. And here pops up the journal entry. So if you're not super familiar with accounting, this might look a little bit odd because you can see there's a debits column and a credits column. So those might seem like a foreign language to you if you're not familiar, but we'll just kind of go over this step by step and give you the basics. I do want to mention doing a journal entry is not for everyone. Like I said, a little bit of accounting knowledge is helpful. So if you don't feel like you can do a journal entry, that might be something you want to leave to your bookkeeper or CPA or whoever's helping you with your books. Or if you do want to attempt it, it might just be a good idea to have a second set of eyes to make sure you did it correctly. So I'm going to go through this just with a little bit of helpful hints as well, but really it's best if you have some sort of at least brief accounting knowledge to help you do a journal entry, since we are looking at actual debits and credits here. So let's just start off by doing an example journal entry. Let's do one where we're doing it for tax purposes. So let's say we finished our 2020 tax return and we had some depreciation expense to add. So I'm going to go ahead and date it as of the end of the year. I'm going to go ahead and say depreciation expense. So let's say that based on our tax return, we should take $5,000 of tax depreciation. And then the other side, you have an account that's called accumulated depreciation, which is keeping track of how much depreciation you've taken over the years accumulated. So this would be an example. You can see it's not hitting any type of cash account here. It's hitting our depreciation expense account and our accumulated depreciation, which is a contra fixed asset account. And this would be what I was referring to when we talk about our tax entry. So if you had this ready, you would just hit save, and then it adds this to the system. So let's go ahead now and talk a little bit about what this exactly means. So I'm going to pull up a debits and credits kind of helpful guide here. Except we have some normal balances. Whenever we're looking at our debits and credits, if we keep this in mind, it'll usually help. So when I say normal balance, I just usually mean like an increase. What would it be if it was just a normal positive account? So whenever you're looking at like additions to your bank account usually is going to be a positive number. So additions to your bank account is what we would consider normal. That's a normal debit balance. Same thing with the other types of asset accounts. And then if you go down, owner distributions or draws are a normal debit balance. So if you're wanting to reflect that you took money out, if we were just looking at, the accounting basics, that's a debit. You're not exactly seeing that whenever you're working in the bank feeds. It's not showing you debits and credits. It's just kind of a behind the systems thing. This is really, the journal entry is the main place you're gonna see these debits and credits, which is why I wanted to mention them here. And then last one I have on this list is expenses, our normal debit balance. So if you have a debit of an expense, that's increasing your expense. So like on our entry here where we had the debit of depreciation. This is an increase to depreciation expense. Then we look at our normal credit balances. We can see we've got like our credit card account. So if we make a purchase on our credit card, so it makes our credit card balance go up, that's a credit. The same would be for other liabilities. So let's say you take out a loan for $10,000. You would see that loan would be basically, that $10,000 would be a credit. And then as you pay off that loan, it would be debiting it because it would be reducing it. So the credit in our other liabilities is the normal balance, that's the increase. So if we want to do the opposite of increase, we would have to debit. Then owner contributions, so like you putting money into the business or paying for a business expense personally, that's a normal credit, and we're going to look at an example of that here in a moment. And then the last one I have on this list is income. So whenever you have income, let's say you make $500 from a job, that's actually going to be a credit. But again, whenever you're using the bank feeds, you're not really seeing this piece. It's kind of just behind the systems in QuickBooks. But this could be helpful as we go through and do different journal entries. So again, here we got our depreciation. Now let's do one more type of journal entry here. So again, new journal entry. Now let's say today I went to Home Depot and I accidentally gave the cashier my personal credit card to pay for some job supplies. So we're not going to see that on our bank feeds like I mentioned because it's on my personal credit card. But it's still a business expense, so we want to make sure we capture that. So the first account I'm going to go ahead and do is the actual expense. So we're just going to stick it somewhere. We'll stick it under job materials. Let's say I spent $150. We accidentally paid on our personal credit card. I'm just putting that note there to kind of be as a helpful reminder. And then same as usual, I'm going to go ahead and put a vendor name here. I didn't yet have Home Depot on there, so I'm going to go ahead and add it. So we can see I spent $150 at Home Depot. And again, why is this a debit? Because we learned over here that if we want to increase our expense, it would be a debit. And then the other side of this, we paid it for it personally, so we're going to say it was an owner contribution. It's basically like we put $150 into the business, and then the business went ahead and spent that $150 on this expense. So this, you can see our debits and credits balance, that always has to happen. Down at the total here at the bottom, 150 and 150, that means our entry is in balance. So this would be, at least to that part, it would be an acceptable entry. So why did we have owner contributions as a credit? Again, if we go back to this normal balances, if we want to increase, you can see under credit our owner contributions, that's what we have to do as a credit. So we're increasing our owner contributions. So there we go. And we can now see in QuickBooks, if we were to go run a profit and loss report, this $150 that we paid personally would be included on that profit and loss report because we added it via a journal entry. So you can do save here, and it saves it to the system. Now something that can be sometimes handy, especially if you're not, like I said, super familiar with these, maybe you've had somebody help you do the first one and now you feel like you might be able to do it. If you can refer back to this journal entry, you can actually do a copy, or if you just have similar entries and you just want to copy, you can do this right here, copy. So it gives you a new entry, but your starting place is the old entry. So you would just be able to make your changes based on whatever differences you had and then save it. That can just sometimes be helpful. Like I said, if you're new and you're just kind of trying to use something as a template, or if you have something that's often repetitive, then this could be helpful as well to just do a copy. And then I'm going to go ahead and pull this up. I'm not going to get into too much about how to find them, but you can also see here if you say you need to actually delete the entry, you would just do that here under more and then delete. And then that would remove this journal entry from the system. So you would no longer be able to see this in QuickBooks. You would have to go and do another journal entry if you wanted to add it back. So really those are just the main basics of doing a journal entry in QuickBooks. So I hope that's been helpful. If you have any questions, feel free to reach out to us. Otherwise, we also have some other helpful videos about QuickBooks Online and various resources in QuickBooks Online and things you can do in it if you want to take a look at those. Thanks for watching.